Hello everyone, welcome back to the Torin Dove Financial channel. If this is your first time checking out one of my videos, I greatly appreciate it, and if you're coming back, thank you very much. So last week I covered a bit of an interesting thing going on where we had the reemergence of meme stock mania. Again, we covered over the Kohl's, Krispy Kreme, and Open Door meme stock mania. And immediately the day after I made that video, it kind of all died. It died instantly. And so I really just wanted to quickly kind of recap what happened, what went wrong, and then I wanted to try and do something interesting where I came up with the ideas that how I would design a lasting meme stock rally and kind of offer a solution for what ended up going wrong and why this one fizzled out as quickly as it did. And then lastly, leave with some market commentary as now that we have meme stock coming back into play, what that might mean for where the market's at. I know you've probably seen a lot of things guesstimating whether or not markets are getting too frothy and things of that nature, and so I want to go over and cover that at the end. So really quickly, for those of you who don't know or want to go a little bit more in depth, as I mentioned earlier, Kohl's, Krispy Kreme, and Open Door on July 22nd all had massive meme stock rallies. But then quickly on 23rd, I noticed some things right at the opening. Basically, there was a very, very large amount of transactions going on pre-market. And I know Krispy Kreme specifically was up about 50% at this time. And then right before market open at 9:30, there was just a selling off a cliff. It really looked like a lot of institutional investors were kind of hyping up this false thing and then getting out as soon as they could. And then as the gates opened, everybody just started losing money. It was rampant, very fast. And so what you want to see is even in the second GameStop and AMC rally where it wasn't necessarily a huge thing, it still put up a fight for like 2-3 days, but this almost felt like the makings of a crypto rug pull. It didn't seem like there was any long-term focus with this whatsoever where people were trying to actually create an opportunity, get some unique things going on. It just quickly became this thing where everyone was finding these new names to prop up. So I know I was actually on a webinar with more of like a traditional finance type of webinar where they even actually started talking about the meme stock craze because the Sydney Sweeney jeans ad came out, and so American Eagle was seeing a little bit of action there that it normally wouldn't have. And so that was also part of the meme stock craze, was really once it became clear that Kohl's had been worn out for the day. Everybody got sick of Kohl's and it was time to get out. They tried to prop up Krispy Kreme a little bit and that wasn't necessarily working as well. And then GoPro was the one that on the 23rd actually really started taking off. But kind of some of the things that I highlighted in my earlier video, really where the meme stock craze kind of dies is when you're focusing on too many different targets at once. So when you have 6 different companies that everyone's pouring money into and investing in and taking options on, it's a lot harder than, say, if there's a rallying force behind GameStop. And we keep talking about GameStop because GameStop is the one time that I'd say it really went well and really worked. I know if you're thinking of this in 3 years later, they're nowhere near that. And of course not. Again, these are memes. They're not going to be around forever. They're a very quick way to get rich and move on. So again, when you split it up into these multiple targets where there's no focus, then you're not going to see the results that you could potentially see rallying everybody. You know, I had a lot of fun checking Wall Street bets this time, but mostly what I was seeing was a lot of people losing money and then coming in way too late. They're getting the FOMO, they're reacting, and it just didn't go well. And I think that's why this meme stock mania, especially with the names I mentioned earlier, kind of came and went and fizzled out really quickly. Now, Open Door has been actually sustaining a little bit. They saw some price recovery since the large sell-off on the 23rd, but the others are almost back to their pre-little quick meme stock fizzle. And basically, it kind of just signifies so much of the internet today. Something can be really cool one day. I think when everybody was posting the Fetty Wap memes to all of the movies, and then suddenly in a week or two, nothing. it's gone. The volatility's there. So many people are stuck holding shares of Kohl's and Krispy Kreme and GoPro, these companies that probably aren't making a significant comeback. And it's the people who bought into the original hype but then didn't kind of realize the rules of how this was going to play out. You're basically pumping and then dumping. It is straight up a rug pull. So, again, I went over a little bit of kind of what went wrong when you split it up into targets. Now I'd say we're going to pivot over to how I would personally design a meme stock rally, and kind of taking some of the tools that we saw in the GameStop and AMC and trying to make it to where there'd be a sustained type of thing. So really quickly for our target, all of this is obviously going to be speculative, so we're going to pick a name that is not publicly trading at all. But for instance, something that I think would actually catch some attention would be, think like a 23andMe. Crapper business, it's going out, but if you guys made the investment thesis that 23andMe was going to take all of the data it had accumulated across all of its customers and was then going to sell it to China to make biological weapons, there is a plethora of meme ideas, of things you can rally behind there. You need something fun, and that's kind of like where we see the ones like GoPro take off for a bit, or even the Krispy Kreme example. You need something fun and goofy, but also is going to be rallying. And I feel like dark humor can definitely play that part and be more of a sustained thing than just one day. So you'd obviously want to come up with a name. Next, you'd want to make sure that that is the primary focus. And I think a great way to do that is introduce what I would consider our figurehead sacrificial lamb. Now, when you have a sacrificial lamb in this instance, they need to come to terms with the fact that they're going to be committing securities fraud. Or probably they're going to go away, probably. Realistically, if you want to do this well in a sustained way, they're at least going to get targeted by the SEC. I mean, even Roaring Kitty went through things. While he didn't get sent away to the slammer, you need somebody who's going to come to terms with, we're now going to rig the game in our favor, and there's the potential that this goes south for me, and I'm okay with that. After we find our said sacrificial lamb, they need to be the one who's going to create the rules on how this is going to work. There needs to be a long run-up period where you set a set planned thing, like, say we have 3 weeks from today to get our cash ready, to prepare. We're going to push out a bunch of memes. This is the name we're targeting, and this is the target price we're going to push it up to. You need something like that, where everybody has time to pull their money. And of course, with all of these things, they're not going to operate perfectly. A lot of people are just going to accumulate shares and put options on it immediately at that point. But if you get enough people unified with this message of, let's sell our data to China, or like something funny that like will create some commotion, get some hype, then you'll be able to get enough people to fully cooperate that it'll still work out. So you come up with your day. You very clearly have both a target price and a price you're going to start selling. It's got to be like, the second we reach this target price, we're all pulling our money out at once. And now this is something I think Wall Street would actually get behind, which isn't a good thing, but if you have a set target price and there's a general consensus, okay, we're going to sink it once it hits this price, then there are going to be plenty of people who are going to be trying to short it the second it gets near that price, and kind of doing both of the flip side of gaining the money in the initial everybody pulls in and then dumping it on everybody. And so really you're just trying to make it clear what's going to happen. Don't push out these false fundamental theses that you're not even going to stick around to see at all. Like, even with the GameStop one, it being super undervalued because of this and this and this, you don't need that. You really don't, because you're gone so much before you have any chance to actually see, like, those fundamentals kind of take over. Don't create long-term theses and then just crypto pump and dump your people and rug pull them. Like, get everyone behind the idea of creating a massive rug pull. That's what you need. And so then day comes, everybody pours in, everybody takes money out. Most people probably still get shafted. A lot of them still get shafted, but at least then there's some unification behind it. Or alternatively, if you don't just want to make it like an instance and you want it to be like a lasting thing, it can be, okay, we're going to have 3 months where we all pull our money into this, make this your checking account for 3 months. And then on this day, we're going to crash the company. It needs to be something that's unifying and people will like get behind. So either you pick like something funny, but ideally it would be a company where you can make a lot of memes off of it, where investing in that company in the first place would be eyebrow raising and people would be like, why are you doing that? And people would want to talk about it and discuss it and, oh, what do you think about this? When you split it to 6 different names, it's hard for people to kind of keep up with and try and take some money, switch positions, do a bunch of transactions. And I mean, you have people right now who would have participated or did participate in this most recent meme stock because, oh, I saw the movie, oh, I saw what happened with GameStop, and I didn't want to miss this. And now they've lost a large amount of money and they're not going to come back. So you'd rather have them participate in an event. We're going to call it an event. It's going to be, yes. You'd rather have them participate in an event where it's really going to shoot the share price up considerably. And if you pick a very small company, right, that does something or is going through financial trouble or whatever, but you're able to make this like a very viral thing that everybody can get behind, then it's going to do much better. I mean, when we had the GameStop and AMC, we had celebrities. I know Dave Portnoy isn't like A-list celebrity or anything, but you had people who were like streaming and talking about it and doing it, and you had people tweeting about it, and you just didn't get this really with Kohl's and Open Door and things. And so it would be interesting to kind of see what could happen if this was done right, with the full intention and like everything being fully transparent and out there with a clear goal of reaching a set target price and then everybody selling at once. It would just be interesting to see how that would operate in today's market. Now, a lot of you have probably guessed, when you start to see meme stocks coming back and you see IPOs that are just blowing it out of the water, up 300% the day of the IPO, you are definitely in a frothy market. I know when we look across the S&P 500, I want to say, if I'm pulling this statistic off the top of my head, but it was brought up in the webinar, so I'm hoping I'm getting this like actually kind of close. I want to say that the average PE in the S&P 500 about a year ago was about 19, and now it's about 26. And we are going to be going into a falling rate environment. I don't necessarily feel like that's pure Fed speculation at this point. I feel like it's pretty clear. I know even if Jerome isn't going to cut a large sum, we're probably going to get some nominees that will cut rates by quite a lot, especially with the most recent job data and inflation data coming out. And so I think it's going to be safe to say we're going to be in a falling rate environment. And if we take last September as any sign of what's expected, it's likely that it's going to become more frothy and there's going to be large gains. I mean, one of the things I do on this channel with Microcap Mania, I've been having a really hard time with just trying to find like actual bargains in companies that I want to get at the share price they're currently trading at. And so that's probably going to be a thing. Now, I'm very openly anti-market timing unless it's a small position in your portfolio that you feel perfectly okay with losing or anything like that. And so I really wouldn't try and panic sell or set aside a large thing of cash and just prepare for this doomsday that may or may not come. Now, just because I think there will be a correction in the future, I don't want people to panic or hear something like that and then suddenly decide, okay, I need to get out now, or I'm going to dump my whole portfolio into gold. I wouldn't try and do anything drastic like that, but certainly I think it's worth talking about where markets are going at this point and understanding that share price and the price you're able to actually acquire positions at is one of the most important things when it comes to investing. Okay, thank you very much for letting me get my Yap session out about kind of giving an update on the meme stock craze, kind of designing my own, and then talking a little bit about some current market commentary. I'm really looking forward to creating another video here in the near future. I know I'm wrapping up in this specific location where I'm at currently, and I'll be back into my apartment in a few weeks here, so I'll probably be able to get back on more of a pace as opposed to like one video every week, week and a half. I might be able to go to 2 or 3 even. I have a really fun time doing this, so thank you very much. I greatly appreciate you checking out today's video. Yeah, thank you.